Welcome back to Hitting the Bid, the place for retail traders by a retail trader. I'm your host, Jeff, and I'm here to break down market moves, share lessons from my own trading journey, and help you navigate the ups and downs of life in the markets. Whether you're just getting started or been trading for years, this show is here to help you stay sharp, stay disciplined, and most importantly, stay in the game. Today is Thursday, July 10th. Let's get into it. Going around the market here today, the S&P 500 via SPY is up $1.60, which is about 0.25%. Kind of testing all-time highs here. We saw an all-time high on Monday at 626, so just a little bit above that. The QQQ, so the Nasdaq down about $1, the lagger of the group of equities here. And then IWM up $1.70, which is about nearly 0.75%. VIX down 10 cents today. It's really been depressed here, so 10-cent move. It's not much, but it's still about 0.6% just because of where the levels that the index currently is. Just looking around a little bit more, we got Bitcoin. Nearing all-time highs again. It's right now at about 111,000. It's getting close to that 112,000 all-time high. We'll see if it can break through. Bonds, a little bit weaker today. They did have a pretty strong day yesterday, but down 7 ticks today. Just going a little bit through currencies. We have the British pound. That one's down here. It's been on a little bit of a steady downtrend here since the beginning of July. And similarly, the euro also down. These are kind of driving the strength of the US dollar here through July. Although you can see here on the euro especially, it's gone from 1.03 to as high as about 1.19. So really been pretty strong here on all of 2025. Going through metals, we have gold up $7, really kind of just bouncing around in a range here near between 3,300 and 3,350. Silver up 63 cents, pretty strong, up about 1.75%. And then copper, you saw a pretty big up move on Tuesday, up to about $5.89. Seeing a little bit of strength today, up about 2.23%. So we'll see where that goes from here. Then we have crude oil down today, but it was kind of rallying here from $64, getting to as high as about $69, but kind of settling out here at $67 or so. And then finally, nat gas up 11 cents today, which is a pretty big move, 3.6%, but it's really been depressed here kind of since middle of June, June 18th or so. Now just a quick trade recap. During the last video on June 26th, I sold a put in HIMS, which is a bullish strategy. I took advantage of the elevated IV rank. I sold a put over here during the morning. That was June 26th. Right here, got some continuation throughout the rest of the day, so it was pretty strong all day, and it ended up closing at about $46, a little over $46. And I got a little bit more continuation the next day. You can see a little bit of a gap up, and then more strength. So because of that pretty quick bullish momentum, I took about $100 out of here, so 103, and so really $100 net of fees. So because of that, taking about 30% of profit of the initial credit received on entry, so $100 out of $345 on entry is about 30%. Because that came so quickly, I closed the position. At that point, the risk versus reward just wasn't there for me anymore. So today, we're going to go to TLT. So this is a 20-year Treasury bond ETF. It's a little bit smaller product than slash ZB, the futures product. So I'm going to go here. This one might be a little bit easier for others to trade. So this is a basket of treasuries with 20 plus year duration. And you can kind of see it has had a steady uptrend here. Put on some drawings I made. Pretty much a steady uptrend right here, following this kind of yellow line, testing it a few times. It was going, got as high as about here, 88.44. Before breaking the trend line here on Monday, gapped lower. But since then, it's made a little bit of a V-shaped bottom with yesterday's candle here pretty strong and closing above its prior bar high. And we're also seeing today's candle trading above yesterday's low, so kind of holding this this uptrend here, a potential uptrend. Now it does seem like every time bonds sell off, they are getting bought back up. You can kind of see it here, here, and here. And I do have a longer term view on bonds where I think they'll be higher at the end of the year. So I'm just going to keep it simple. So we'll go to the trade tab here. I'm going to go to the November expiration, so 134 days to expiration. I'm going to keep it simple, and I'm going to just buy this call here at the 92 strike. Let's see, I'll put it in here, see if that one gets filled. I may have to walk it up, so I'll go ahead and walk it up here. One more. And it looks like there, I was filled there at $111. Now this is a lower probability trade, but the risk reward is asymmetric. So I'm risking $111 and the reward is uncapped. So because of that small risk and where I think that bonds are going to go, I'm going to just buy it and hold it probably until the Federal Reserve meeting in September. We'll see where things are trending there, but currently that is where the cutting cycle is projected to start. So we'll see what kind of movement we get until then. Now this one isn't going to move fast, so we'll just check in on it periodically. And that's it for this week. Thanks for tuning in to Hitting the Bid. If you enjoyed today's video, don't forget to subscribe, leave a review, and share it with a fellow trader. You can also sign up for my newsletter at news.hittingthebid.com, where I share market insights, interesting tickers, and practical strategies to help you grow as a retail trader. Till next time, trade small, trade smart, and keep hitting the bid.